Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Wow, Bitcoin 123,000 and some change. This is fantastic. Be sure to stick around. We got some super important stuff to talk about. We're going to discuss open interest with our derivatives market, as well as the market overview here with ETFs inflow being super high. This is actually the highest we've seen since December of last year. Also, starting off with liquidation delta. So go ahead and hit the like button, comment below, and let me know if you do appreciate or like this new format. And if you're new to the channel, welcome on board. You want to become a better trader, CryptoCash.tech is a site linked down below. Let's talk about Bitcoin here. First of all, liquidation data from the last 7 days is pretty sparse. There's not a whole heck of a lot left because most every single short in the recent past has been destroyed. We do have heavy concentrations or heavier concentrations accumulating at this 130,000 range. That is essentially just kind of the area in which people feel comfortable taking a short position or having a stop loss at that level or a liquidation event. Okay, that just kind of tells us that could be the next target. We're going to look at some fib levels too, based on our local descending trend, and kind of help understand, more importantly, where those levels are at based on key fib extension levels. We're right there at that 0.618 fib level, or at 1.618, which is effectively that key level resistance for us at 120. We'll talk about that more in a moment. Liquidation long delta, 45 billion. This is super huge. Generally speaking, the last time we saw this high was when we had our last spike in ETF inflows, and that was back in December of last year, when, if you don't recall, President Trump was in the runnings to essentially become president. So that was essentially a pretty big deal there with ETF inflows. And ETF inflows really tells us a lot about where we're going to be moving forward. All that being said, 118,000 is that local area of support based on open interest. So the price pulls back, 118 would be the solid area of consideration. So let's jump into kind of some of this important market data here. So first of all, the market overview, it just gives us a good indication of where we're at with ETFs. And as you can see, last 2 days has been super huge. This is a big deal because we look at the 1 year here. Last time it was this high was December 1st, right? Which is right there with the, prior to the inauguration, kind of like, the hope is restored, America's getting back on track, right? America's great again 2.0. All that being said, this is a good indication of the fact that we're in pretty good shape here, likely moving forward based on that simple sentiment there. And if we look at derivatives too, open interest is super high right now. The higher open interest is, the more likelihood the price action goes higher. That's a simple way to understand it. It's not exactly a one-to-one ratio with that, but based on the market movement and everything the way that it is, the back end's looking super strong. So let's start with the fib extensions here, kind of go with the macro perspective, so you understand specifically where we're going to be here next as far as the overall sentiment. So from the local high of 112 to the recent low of 98,000, based on Fibonacci retracement, we can see this 1.618 is right there at 120,000.5. So that would be a very logical place to consider a long if we get lucky enough for the price action to come back down to the 118 to 120 range. Again, fib extension levels. If we go up to a better case scenario, our 2.0 or 2.272, that is right there at 130 and or 125. So we do see a 125 to 130 range. There's a decent chance we'll start seeing some slowing pressure there, just based on, once again, fib extension. Keep in mind, these are just, there's no other confluence here, right? So if you're watching Elliott wave theorists kind of tell you about how ridiculous things are going to get, while that's true and accurate, in a lot of ways it could hit those levels, the likelihood of that is, I wouldn't say super high, right? Now, once more, it just depends on who you are and where you're thinking, but there are, of course, other things to kind of look at, which these are a little more consistent with previous histories. If we take a look here at our rainbow price indication, we are in pretty good shape here. If you look at the overall sentiment, there's a decent chance that we continue to leg up here and move towards that 150 range. So, I mean, I do think based on previous cycles, we're in pretty good shape here to see further upside. Now, will we hit the $1 million range? That'd be amazing, but probably not for a little while. Either way, that's a conversation for another day. Let's take a look here at total market. This is basically total market cap here, letting us know that we're in super good shape, 1.3 trillion. Obviously, it can go much higher. We've seen higher price points once more back in December. So with the ETF inflows being high and the previous cycle hitting 1.6 trillion, we're in pretty good shape here to see a continuation further up. Same thing here as well when we look at volatility. This is super low, but obviously it's ramping up. But when volatility hits that lower mark, we're only at that halfway point. I think there's a decent chance we continue much further here. We're going to expect to see much more volatility in the market moving forward. We take a look here at Bitcoin dominance. This is something that's important to recognize. We're in a descending type of trend right now, which is important because as Bitcoin dominance goes down, basically the price action for altcoins goes up or it triggers alt season. Now, if we jump over here and kind of look at alt season index, it is increasing. It was at 28 yesterday. Now we're at 32. Or sorry, correction, 29 yesterday, now we're at 32. So the concept here is that any altcoin here that's above this middle line here for Bitcoin, those are ones that are worth investing in. All right, we got our SCIs, our Ethereums, our SUIs, our Dogwoof hat, 155% up. There is some pretty good performers here over the last 90 days. And those are all ones that we invest in as a community. Either way you look at it, this is super strong. As Bitcoin dominance continues to drop, we're seeing the alt season essentially starting and or stabilizing for altcoins, which is a super strong thing. So let's take a quick look at the weekly time frame and work our way down and call it a day here for you folks. Once again, do appreciate you liking, commenting on the video, and just being an amazing part of my life. This is a really cool experience. Okay, so fair value gap. What do we know about these? Well, they don't always get filled, but it's common for them to get filled. Now, do I think we're going to see 86,000 and fill a previous gap? Probably not. But worst case scenario, we do see 110,000, I would say, as a local bottom, just based on that being the previous high range. That could work as a new low. So just kind of throwing it out there, being realistic with you. 110, that previous high, could be the new low for us here. If we take a look at the weekly indicators, though, we can recognize everything's on fire. We're now over 70 on the RSI, and we haven't seen that in quite some time. I think the last time we saw over 70 in the RSI, once more back in November 24, so that was last year, and then obviously back in 2023 as well when things were kind of on fire. So overall, things are looking pretty solid here on the weekly time frame. There's no reason to consider, I guess, shorting, even though you could find some benefit there. The truth is, in situations like this, you never truly want to short. It's just not a good idea. So I'd recommend not doing that and moving forward. So the daily time frame is going to indicate the same thing as the weekly here, only a little bit more focused here, where we have RSI on the increase. No reason to consider shorting. If you're going to consider shorting anything, it's just a bad idea right now. I don't recommend it. While there will be a window of opportunity in the relative near future, you're best just kind of doing that shut up and take my money situation right now. This is literally what you're doing, just putting money in the market. At least that's what everyone else is doing. There's no reason to bet against it. That's kind of the concept, right? I'll update our fib levels, post a playout chart on our Twitter, Telegram, and Discord here for you. But for right now, at this point, 118 is that local high, that previous high. We also have a decent amount of open interest there. So my speculation is 118 is going to provide a lot of support for us. If not, the 112 to 110 range, of course, because we have a pretty significant gap between now and then. So if we do get that fair value gap filled, and we're fortunate enough to see 112 to 110, that'd be a solid consideration for a long. But between now and then, do not short. It's not recommended. Even if the price pulls back tomorrow, I don't care. It's just not worthwhile. The odds of success are very low. All time frames are screaming bullish convergence, and there's really nothing here. There's nothing hidden, like some people may be indicating. Because again, all the back-end data here, folks, is really just screaming that we are in pretty good shape to see further upside. There's no other way around it. So I hope that this made sense, that I was able to describe it correctly. Make sure you jump on over to our Twitter, Telegram, and Discord, and or just become a better trader. Look forward to work with you. Don't be shy. Feel free to reach out. We'll look forward to seeing the next one. Take care.